Good morning, everybody. I, Chandrashekhar Tilak, welcome you all for this fourth episode of our Market on 7th of October 2020. As we have seen a tremendous developments as far as the share market, Sensex and our mutual fund investments are concerned, I really want to take a pause and have a relook as far as our current scenarios are concerned. Is any one of us really comfortable with a level at which BSE, Sensex and our Nifty indices are moving? Generally, when indexes are going up, a common man or institutional investors are happy. But when BSE, Sensex starts trading around 38,000 or 39,000 in today's era or today's context, we find it very difficult to fathom, especially considering the status and stage of national economy as well as our global economy is concerned. Yes, certainly our economy has recovered as far as compared to April to June 2020 quarter is concerned. At that point of time, or during that particular quarter of April to June 2020, our national GDP growth rate gone down by 24% to the great extent. It is expected that as far as the same rate as far as the July to September 2020 quarter is concerned, will be held and will be going down only by 12% per se. If that is going to be the case, there are two reasons which have been cited over here. First and foremost, that it is expected that agricultural production during this particular year in our country would be at a national, it will be at a peak level, or it would be at a highest level ever recorded as far as our economy is concerned. It has been getting absorbed, and the second reason is naturally unlocking or the partial unlocking or the phased manner unlocking which we are witnessing over a period of time. Given that not only what actually has happened, but even the announcements which are forthcoming or it is expected, economy is certainly picking up. And that particular factor has certainly got reflected into one single figure when we came to know that a monthly GST collection for the month of September 2020 is in the vicinity of 95,000 crores. It is almost after a period of 6 months when our GST collection has gone up rather than gone down compared to earlier month. Certainly, the last 6 months or so was a very peculiar period, and at that point of time, comparing to that, certainly that situation is no more, and we are going back to a normalcy. I am very much aware that using the word normalcy would be too early considering the economic scenario as of date. But even then, when we are having indices at the level of 38,000, 39,000, is it a culmination of various other things which we are having into? Because generally, we have always witnessed, as per as the history of our capital market is concerned, that whenever gold market picks up, the share market is generally at a nosedive. When share market picks up, it has the repercussions as far as the gold market and real estate market are concerned. Even within the capital market, generally IPOs come out when indices are at a highest level, which we are witnessing even now. But as a fallout, as the primary market gets flooded with many IPOs or FPOs, secondary market does have a negative repercussion thereof. So although the positivity or the peaking levels of the Sensex is an indices or a trigger for IPO market, the emergence of IPO market at that point of time is always a negative trigger as far as the secondary market is concerned. But what we are witnessing now is really peculiar. Very rarely such a scenario is witnessed. At this point of time, we are seeing that a huge response as far as the happiest minds kind of IPOs are concerned. If not to that extent, but certainly in the same direction, the responses have repeated as far as the subsequent IPOs like a UTI other things are concerned. Not only that, but based on such a circumstances or such a background, it has been speculated that Mazgaon Dock Limited would be coming out with its IPO. There is every likelihood that government would take this opportunity and go ahead with a further disinvestment of the stocks which are already listed, like Container Corporation of India or a Hindustan Aeronautics Limited or a BDL or a BEL or a IRCTC. And people are now have started contemplating whether LIC issue is far off or not. Probably LIC issue announcement may be withheld in order to ensure and assess what sort of a response a UTI IPO gets. And if all these IPOs get a good response, there is every likelihood that LIC may come into the picture as far as the primary market is concerned. It is already contemplated that if this particular thing goes up, and considering a very precarious position as far as our central government finances are concerned, who advised the state governments that instead of central government making them the payment of arrears, the state governments can go to the market and raise a loan. Probably it was in order to encash the 7 lakh crore deposits reportedly being collected by our banks, and banks are in a position to are in a mood to get it back to the Reserve Bank of India, and subsequently commensurate loan proposals are not forthcoming. So considering these particular thing, government might have advised the state governments to go to the market and raise a debt either from Reserve Bank of India or somebody else. If that is going to be the case, certainly the primary market and the secondary market would witness a different fork weather altogether. I am not contemplating any issues per se, but I personally believe that if this is going to be a reality, and for say longer period or for an enhanced period, primary market as well as secondary market are going to receive a good response simultaneously, then probably Indian Postal Payment Bank may be also launching its IPO. Seeing its geographical spread, one thing is very clear, that investors have become choosy as far as the selection of an instrument or a selection of a script is concerned. It may be triggered because of a sudden announcement many months back or a few months back by Franklin Templeton Mutual Fund when they closed down their 6-date schemes. SEBI came into play, and then many date mutual fund schemes of various mutual fund houses were under scanner. That affected as far as not only the individual investor or not only an institutional investor, but even probably that took away a facility in the nature of a parking of a fund. And probably bank deposits or other areas are looking into it. It is not that people do not want to invest. Yes, certainly their individual incomes are under threat. Certainly their individual incomes are getting delayed. Certainly their individual incomes in many cases are getting paid into installments. And that's why people are more worried about the security of their fund, and at the same time they want at least some sort of a return thereon. And that is getting reflected as far as the IPO listings are concerned. Generally for many years it has been the history of our country that IPO may get a good response, but on a day of listing or immediately thereafter they fall below the issue prices of their things. But it has not happened as far as the recent IPOs are concerned. Probably government or the policy makers or the investment community or the bigger investors are feeling or having in the sentimental zone or a mood that this particular thing may continue. Under such circumstances, it would be really worthwhile considering what kind of a strategies we are going to adopt. This kind of a current investment scenario is a demarcation as far as our investment strategies and psychologies are concerned. Certainly, it is getting augmented by the fact that real estate is not booming. Gold prices are slowly going down. I am using the word slowly very carefully because I am very much aware that a sudden rise of gold prices which we witnessed a few months back, it was more because of the central banks of the various countries parking their funds in gold rather than investing in their own economy or in foreign economies. As corona situation may not be improving, but unlocking of the economic activities is forthcoming not only in our country but across the globe, and that's why probably many of the reserve banks of the many major countries have started offloading their gold stocks, and probably that may be the reason why gold prices are going down. That means clearly shows that now investment in real sense, which is otherwise has to be the case in real sense, is turning out to be a game of a velocity and a liquidity. Probably it is becoming a game of volume rather than a game of margin. And that may result or that may trigger or that may prompt many good high-priced companies having the face value of their shares at a particular level to go ahead with their plans of a split of face value. And there is no need to tell to the elite investors like you that what sort of a positive impact it has as far as the trading volumes and the market price is concerned when any particular company goes ahead with a split of face value. Recently, we have witnessed it in case of Eicher Motors. I am worried, or rather I am afraid. I am using the word afraid in a lighter vein, that probably that may trigger to the companies like Nestle, Eicher Motors and others to go ahead with a split of face value. Certainly, only those companies which are so sure or confident as far as their future performances and progress are concerned would be in a position to do this kind of a scenario. And that itself gives a very good trigger as far as the investment markets are concerned. Because we are seeing that yes, when Corona broke down or broke out, then certainly it had a negative impact, especially after Corona as well as this Franklin Templeton decision, that many of the investors went ahead with SIP freeze kind of a scenario. But now, over a period of time, we have witnessed that not only the industrial houses have started refunding their loans even before the moratorium was over, but they are going ahead with raising their demands for loan. And similarly, individual investors are also trying to invest, or rather motivated to invest in good performing mutual fund schemes. So overall, this scenario is certainly a mixed bag, but that's why this particular field is not only intriguing, but probably it is interesting as well. And I'm quite hopeful that many more interesting facts may unfold itself in the coming days. When I use the word interesting, I'm considering both positive as well as negative. Because unless and until there are the triggers, there would not be the markets. And if the market is a harbinger of a connecting past with the present and present with the future, future not only gets discounted, but sometimes future has to be counted as well. Although I am keeping my fingers crossed, certainly I am quite hopeful that the end result would be positive. But till that time, they will not be testing only our patience, but they may be testing our passion as well. Let us hope for the best. Best wishes and thank you very much.